Hello everyone, K Kim here with the Traders Club. Welcome to the market update. Today is September 15th, 2017, Friday. As I record this video, market should be open another 40 minutes or so, so you should see some flashing lights on your left. We're going to keep things short today. We're going to be looking at Spider, Diamond, Russell, NASDAQ, and XLF, and we'll call it a day. I've done important analysis, enough analysis when there's a shake and bake happening here last several weeks. And right now, the market is at new all-time highs. We continue to cultivate an uptrend. We don't have any reversal signal, any warning signal. Market is going to have ups and downs. So I'm just going to give you some of the levels to watch should the price pull back, and we'll go from there, right? So I hope you guys had a good week trading this week. Let's see. Let's try to forecast what could possibly happen next week here. We had a dividend paid today on the Spider, so we saw that gap down. I really do not like these dividend gap downs. I'm going to explain to you why in a little bit. But S&P 500 index itself, we can see that we are still grinding here. We're still consolidating last 4 days, which is a bullish pattern in the minor term if we do see a breakout. But I want to explain to you just real quick how I just really do not like these dividend pay. So you can see this dividend pay, this gap down. Obviously, you know, we're actually still up 0.13%, but what happens is if I just go and observe what happened last 3 to 4 dividend payday, it always kind of was made things hectic. You can see right there, this was a dividend paid day. Do you see that gap down right here? This day, well, things did get hectic on that dividend after the dividend pay. Right here, that was a dividend gap down. Well, things did get hectic on the second time there. And this time right here, this was also another dividend pay gap down. Well, things did get hectic for about a week or so. And then this was also right here, I think, let's see, right there. So you see that gap down right here. That was also dividend pay. The things seems to be doing okay, and then things turn to a little bit hectic also. So you can see just 1, 2, 3, 4. Last 4 times after the dividend gap down, things did get hectic for like, you know, week or two. So this time, I'm not sure at this point, so we'll have to see how it plays out. So I got some of these levels I want to share with you. So 247.98 is the next level of support should the price pull back next week. That is a prior resistance. Obviously, it's obvious support, old resistance, new support level. Also, if this thing starts to breach the gap, this level 247. A lot of times what happens, if we see a kind of a pretty sizable gap up in an uptrend, it usually what happens is there's times where it will come down, not fill the entire gap, but fill partial gap, like the 50% of it, and then move higher. I see that kind of happening a lot. So that's also a possibility where it comes down at 247.28 and then bounce. That's a level where we see the 20 EMAs residing too. Worst case scenario, come all the way down, fill the gap at 246.57, and once it fills the gap, probably could act as pretty strong support. So let's see how it plays out. We'll revisit next. We'll follow up. Let's go to Dow Jones Industrial Average. Dow Jones here, obviously, it's been in a very strong bullish uptrend. 20 EMA has been a strong support here. When we break 20, where does it come down to? 50. It's been a clockwork since this all year long, pretty much on Dow Jones Industrial Average. You know, we lose 20, it comes clockwork to 50 EMA. We find support, we comes down to 50 again. We go up, we hit that 20, get up, hit that 20, get up again. We lose the 20, comes to 50, and we've been doing that for all year long. So I don't know how long that's going to continue, but I want to continue to give benefit of doubt to these moving averages. You can see where 20 EMA is rising, 50 EMA is rising. We're still in an uptrend. So should the price pull back, I think we got a little bit of gap right there that is still open. So I think I'm going to give you a couple levels of support on Dow for next week. So we got the 221. which is a kind of a very, very minor micro term gap. If we should have pulled back a little bit, that's a gap area, 221.28. That's level. Possibly if we continue lower, then it'll come down to about 220 to fill this gap. Probably see some minor term support there if we do fill that gap. Should the price continue lower, it could come down to about 220.17, which is a prior resistance, and that's a probably level. That's possibly a scenario where this thing does see a probably more sharper pullback, then probably wants to come in and kind of retest at 20 MA. So 220 likely act as strong support, where that that 20 MA is gonna come and meet it, and then that prior resistance. So those are some of the levels to watch next week should the price pull back. If not, it could maybe see some kind of consolidation before going higher. I continue to give benefit of the doubt to the buyers in this market as long as we're seeing these moving averages moving higher, as long as we're seeing this momentum. And as I look at some of my oscillators here, especially on the weekly chart, they're not overbought. I mean, daily we're getting there, but we got some more room to move there. Russell 2000, we're seeing pretty much epic short squeeze move happening here. This was when everybody would start freaking out. This was when it trapped the buyers and sellers. Well, because the longs, they got scared the hell out of this position and they closed out their position. And then you can see right now they're really kicking themselves at this point. But shorts, well, they start adding to their shorts or starting new fresh shorts and thinking that Russell 2000, we're seeing major topping pattern. And so this is a kind of a major level where it really rattled everybody, and you can see how the market deceived everyone and it's getting back up here. There's a chance when something like this happens, especially after about what 6, 7, 8 months of a consolidation and it just pretty much faked everybody out, there's a chance this thing could pretty much go straight up for a long time. There's a chance of that. However, should the price pull back, we want to see 140, 139 level to hold. Again, if it comes down, this is prior resistance, possibly you find support, continue higher, or if we decide to kind of breach a little bit of the gap, maybe 50% of it, which is level 139.75, coinciding with the 20 EMA as well. So 139 is a strong level of support. It did act as support back in September 8th, right around 138-ish level. So those are the level to watch should the price pull back. You can see the 100 SMA though is guarding 140 level. You can see 100 SMA act as support here and here, a little bit there. We gotten below the 100 SMA. As you can, 100 SMA rising like this. We gotten slightly below it, but you can see that the 100 never curled down. That tells us that we are still in the intermediate to primary term uptrend. The price gotten below it, but 100 was actually pretty steady. And then as you can see, the price is actually now back above the 100 SMA. So should the price pull back, I think 140 probably going to act, the 140, 139, 75-ish going to act as strong support. But again, I do think that Russell 2000 could very well continue to move higher. NASDAQ, I think this is where a lot of bears are going to argue that we are forming rising wedge. Rising wedge is actually categorized as a bearish pattern, where they say, it consolidates in a wedge pattern, rising wedge pattern, and then it breaks lower. And that's what it says in a textbook, but in real world, when it happens, when the rising wedge actually forms in an uptrend, there's many things that can possibly happen. What happens is a lot of times, not a lot of times, but sometimes what it does is it consolidates and it breaks up to the upside. It's actually 50-50. I've seen actually many times, especially in the indices, where you see a rising wedge. I think in Spider, if you go back in Spider, you can study this. Go back in Spider and try to look for rising wedge. Maybe 2013 or something like that, there was a rising wedge and then it just broke up to the upside. So that's a possibility. Also, what can happen is it fakes everybody out. It looks like it's going to break to the downside and then get back up. So those are the scenario that possibly could happen. I mean, the NASDAQ hasn't tested 200 SMA for quite some time now. Last time it tested was July 2016. It's been over a year and 2-3 months now. So I think sooner or later we are going to test that 200 SMA. I'm not sure exactly when. When we do test that 200 SMA, man, that's a buying opportunity, just to let you guys know. But if we do, you know, let's say if this thing actually plays out perfectly, if this thing starts to grind and grind, and if it breaks lower, then there's a likely scenario it comes down and tests that 200 SMA before moving back up higher. So I think sooner or later, the NASDAQ is, I don't want to call it like a time bomb where the whole thing is going to explode or nothing. What I think is, I think sooner or later, I think NASDAQ, I think the money is going to start to rotate from the NASDAQ into possibly small caps and other sectors that has been kind of lagging or slowing. And I think, I don't believe the NASDAQ, we're going to see a huge move on the NASDAQ, though we could grind higher, but I think we may get stuck here in this range for a while, and we may see 200 SMA getting retested. Maybe not this year, maybe towards this next, you know, maybe towards the end of this year, possibly this year. If not this year, early next year, I think that's going to happen. So let's see, we'll follow, we'll see how that plays out. One last one, I'll let you guys go, XLF. Bank sector, and you guys see that I tend to like to look at bank sector a lot, other than other sectors, because I want to see banks to do well for the overall market to be healthy. That's kind of so that's why I always kind of closely look at banks along with the other major indices. That's why you usually find I'm analyzing XLF a lot also along with the indices. So we did see a steep decline, but we found support at prior resistance here, which is coinciding that with 200 SMA. This is a reason why these levels, to observing these levels, important. As of today, we're back above 20 MA. You can see that we have cultivated equal highs. We're seeing buyers today right on that 20 MA. 20 MA did act as resistance. Right there, you can see resistance, resistance. We gap down. We gap down to where? 200 SMA, prior resistance support. We find support. We saw a little bit of bullish belt hold or bullish piercing type of candle. So big gap up here, sustained the gap. We saw another gap up. We're seeing a little bit of pullback, possibly a bull flag before moving higher. So we got a little bit of gap here also. You can see this level right there. So that's kind of level. I'll give you another level here. So that's the level, possibly gap fill. So we got 2461, 2452, and the gap open level. I think the worst case scenario, you want to see 2440 hold. If this thing continues lower, possibly this is a level you're going to find support. Maybe have an inverted head and shoulders. Remember, inverted head and shoulder is a lot of times how this stocks move. You can see left shoulder head, right shoulder, and possibly here, left shoulder head, right shoulder, before moving here. Should the price decline deeper? If not, I think currently 20 MA is acting as support. If this becomes support or bull flag, possibly this thing is ready for new all-time high. That is it for me. Have a wonderful weekend. Good luck trading next week.